What's up, YouTube? Brendan from Market Makers, your home for Wyckoff and Advanced Fibonacci TA. And I know you all are super excited today because the Fed meeting started today. Tomorrow it ends and they will give their public comments and announce the rate hike. So that rate hike is supposed to be 0.25%. We're going to talk about that, guys, because everybody wants to know, how does that impact crypto? How does that impact the broader marketplace? Well, let's cover this really quickly, actually, before we jump into the charts. So the 0.25 rate hike, we are hiking from zero. This is a virtue signal rate hike. We have record high inflation, 40-year high inflation. Last time we had inflation this high was the late 70s, early 80s, and Paul Volcker raised interest rates to 18% to combat inflation. We are raising it a quarter point from zero. So it's a virtue signal, guys. Yes, even in economics, even in politics, obviously, we have virtue signals. And that's all this is. They're really gambling here that the supply chain issues will get worked out, that inflation is massively linked to supply chain, and it's not linked directly to the 25 to 40% of the money supply they have printed since COVID, which inflates the money supply, which is what inflation is, okay? And we guys have all seen the punishment and everything at the pumps and at the grocery store, buying clothes, buying everything. So the 0.25 hike will have some effects. The market's pretty much priced these in, okay? Bitcoin moves with the hyper-spec tech stocks. We know that. So we are in accumulation phase in all of the indexes right now. We had a markdown. We are in a sideways market. Markets move sideways about 80% of the time in the stocks, okay? 20% of the time they're moving up or down. Now, the last 2 years, it's been a lot more up than it's sideways and a lot more up than down because of all the money that was pumped into the marketplaces. Bitcoin has never traded in a true bear market. You need to understand that, because looking at a lot of the comments on my videos, Bitcoin will never go below 28. Bitcoin can't go below 25. Bitcoin can't go below 20. Understand the markets you're trading in, guys. This is the third super bubble in the last 20 years. Some of you may not have been alive if you're watching this video when the dot-com bubble happened, okay? Dot-com bubble happened March of 2000. Over the course of 2.5 years, the SPX lost 50%. NASDAQ lost 82%. Amazon, you guys have seen Crypto Savvy show that Amazon chart? 92%, minus 92% the year before. It was the star of the show in the stock market. These markets will crash, okay? We topped out in all these markets in November. So in November, we had the Bitcoin all-time high. 48 hours before or after, we had the Russell all-time high. We had the NASDAQ all-time high. What common denominator do we have between those three asset classes? There's three indexes. What we have is they are all tech stocks, high growth, hyper-spec tech stocks, okay? That's what Bitcoin tracks to. You can see it in the charts. You guys have seen it on this channel. The SPX, the broader market, topped out, I think, January 4th, and ever since then has been a decline. When you turn on the news, which I did today, China's tech market is stock market for tech is crashing. The largest crash since, coincidentally, 2008, the last super bubble, okay? These events are starting to happen worldwide, but particularly in the US, because of the amount of money we printed. We have $30 trillion in debt. And people need to understand this, because the holder mentality is super strong in crypto, and people are going to get wrecked. 2/3 of people in crypto are negative because of that holder mentality. Now, look, this is not investment advice. This is just educational entertainment video. If you want to hold something and not make money potentially for 10 years, because that's what happened in the dot-com crash. You did not make a new all-time high for 10 years, okay? If you want to hold something that long because you love it, that's totally your choice. I just want people to be aware of the risks and understand market history, market cycles. Dow wrote about this. All of the greats have written about this. Market moves in cycles, and this is the longest bull run in the history of the stock market, 12 years. Bitcoin did not exist ever in a bear market in equities. This has only existed in a bull market in equities, and Bitcoin tends to drop about 80% after bull markets in an equities bull market. So again, if you watch my bubble video, my price target video, we're going back down eventually to the COVID lows, your long-term trend. Why is that your long-term trend? Because the black swan event, COVID, when everything crashed, This is just one reason. You have Fibonacci confluence as well. When everything crashed, that is where you found support, that 3,800 level, okay? Does it mean it goes there tomorrow? No. Again, the dot-com crash took 2.5 years to unwind. This could take a long time to unwind, guys, and we're going to have pumps and dumps and trade up and down in the meantime, but understand the environment you're trading in. You can't, when I started trading, there wasn't YouTube. You either got newsletters, emails, maybe a 30-second clip on the news, and hope this guy that runs some hedge fund knows what he's talking about in 99. But guys, this is all there for you to see. And if you educate yourself on market cycles, you'll understand what I'm talking about. It's very important to know so you can protect your wealth, protect your assets. And that's my commentary. But let's go ahead and get into this. So I wanted to zoom out here and show you this chart. The 144 is the blue line. The 233 is the red line. We are on the daily time frame on Bitcoin. I get a lot of questions about these. Why are these important? What do you use them for? Why are you using those numbers? These are EMAs. These are exponential moving averages. That means they are weighted more towards the front, i.e. they're made to trade in volatile asset classes with fast-moving markets, okay? So that's why I use EMAs. I use Fibonacci numbers with my EMAs because Fibonacci is part of natural law and markets correspond to natural law, hence Fibonacci trading, okay? So this is my recipe here for health and welfare of a marketplace. And if you notice here on the bull run, here's COVID over here, by the way. Here's COVID, and you had a 1,700% market gain since COVID. So when people say, are we going to have a blow off top? I don't know, what is a 1,700% gain in 2 years? That's pretty good. I think that's actually the best performing asset in the world, 1,700%. Best performing major asset anyways. So you can see what you have here, guys. The reason these moving averages, these EMAs are important, you need separation like this. This is healthy market and a strong bull run up. If you lose them, you go below them, you enter a bearish market. Again, get back above them, retest them, make a new all-time high, lose them again, and where are we now? We are in a bearish market. Bitcoin's down 44% from its all-time high up here, okay? 44%. And this is not just Bitcoin, guys. If you look at the SPX, look at the separation here. This is the S&P. Here's COVID. Here's your separation on this bull run up. This is so unusual, okay? The S&P typically returns about 10 to 11% in a normal bull run. The S&P went up over 120% in 2 years, over 120%. The NASDAQ went up 150%, and of course the Russell went up 154%. And guess what happened? Just like with crypto, okay? These aren't coincidences, guys. This is the same smart money, big money in all the marketplaces. You get below your 233 and you start to decline, and now what you have is you have the S&P in a correction, over 10% off, okay? So let's get to the actual measurement while we're here. You have the S&P and the Dow in a correction, and of course you have the Russell and the NASDAQ in a crash, which is 20% down or more, and this is right about here. So 12.5% down right now off its all-time high. They all look very similar. They're all below their long-term EMAs, the 233 and the 144, and all of them are accumulating. Now, one thing to note here, let me throw on the 55 as well. The S&P does not have its death cross yet. Sorry, this chart's kind of noisy because I trade with this chart. But you can see the 55 and the 233 moving down here. You can see them moving down. They're about to death cross, but the NASDAQ, again, look at the separation after COVID from the 233. Do you see this before? Look at the difference when the Fed pumps in that money, okay? Look at the difference. This is normal bull market, boring bull market. You're testing the 233, you get above it, you bounce back down, back and forth, and then look at this gaps of separation here. Once the Fed steps in, pumps trillions into the economy, okay? Trillions. Biggest bubble of all time is here, and guys, you can make a lot of money in this bubble. Definitely check out our Discord to learn how to trade and to learn how to read the marketplaces. We have a full education suite there. Once again, we got below the 233 here in the NASDAQ. And again, important to note, just like all the other marketplaces with tech stocks, you have a death cross, okay? Death cross, hallmark signifier of entering a bear market, and you have your 55 and 233 crossing here, and you look at the price declination. Again, you were down 20% here in the NASDAQ, an official market crash. And again, just quickly, same thing, look at the separation from the 233, okay? There's your separation from the 233, and once you get below the 233, you also get a death cross with the 55 and 233. Let me throw that on there. All the markets look very similar, don't they? Once they dip below, you zoom out in the daily time frame, they dip below the 233. They all have death crosses except the SPX, and then you can see the market decline. And right now, just like with Bitcoin, what we're waiting for is the pump up. We're accumulating and we're waiting for that pump up to test resistance. You're going to test resistance. It's important to test resistance because that resistance is going to determine the next leg for Bitcoin. It's going to determine the next leg for all the marketplaces, because if you test the resistance and you flip it, you can have more moves up. This is why it's hard to make thumbnails in this space, right? Because I see the people that click all these videos. Like I see some of these videos just get thousands of views, and one day it says, "Oh my God, I'm so scared for Bitcoin," and literally the next day it says, "Bitcoin 81K incoming." Like it's almost like bipolar thumbnails, bipolar TA. It's hard to make thumbnails because this is an ever-evolving process, and the marketplace is like a live animal. Okay, it's like a live animal. So you're going to have up days and down days. You have your macro trend and your micro trend. Your macro trend is a descending market trading in a bubble. Your micro trend, you can have pumps within this bubble, and if you get enough bullish sentiment, you could have an all-time high in some of these markets, and that's just all part of being in a marketplace and trading a marketplace. It's really difficult to do if you're going to keep putting thumbnails about how everything's crashing for 2 years or how everything's going to 200K or 500K or a million, right? But you get clicks that way. So this type of channel I'm really doing for education for you guys, if you guys want to learn about the marketplaces. And I like helping people, and that's what our room is for as well. That's why we have 6,000 people there, guys. So let's look at this. Again, I showed you this last video, and the reason I moved my fib projection way forward here, so you can see I found the 618 here. These are daily candles. So remember, this is like 6 4-hour candles for every single candle. So this is actually a pretty big pattern if I was looking on the 4-hour time frame. But we have the EMAs moving down. That first number, guys, throw that on your charts because this is key. The 618 at 44K. If we can flip 44K, if we don't flip it, you're going to have what you have right here. You're going to come up and you're going to come back down. Now, if you can hold that support, great. But if you don't hold that support, you're going down deeper, okay? So you're going to have that exact same repeat of that wave because as you can see, you have a W pattern here, right? You'll have potentially the exact same repeat. So it's a nice short if you get some momentum going down. And if you lose these key support levels, you're going deeper. But this is a very key level, and when I look at my other targets, I've showed you this before, so I lay out my fib with a broader or larger wave projection, and I get some other targets. My next key level after at 44, if it is flipped and we have bullish momentum, is 47,250 roughly, and again, I have another harmonic pattern there as well. And then, of course, the phi, which is 1618, the golden ratio. This is super bullish momentum. That's at 55K. That's probably Putin signs a peace treaty, Biden wins a Nobel Peace Prize, and oil executives come out and say, hey, we found a whole bunch of new oil and it's going to be half the price it is now. Okay, this is a lot. If you get up to 55K, what a great bounce, by the way, because we'll be trading this on the way up. If you get up to 55K, that's wonderful. And of course, max peak dead cat bounce, according to Fibonacci, that I could find is 64K. Damn close to our all-time high of 69K. And of course, the 2618, if we did get past this pattern and just bounced up to wick this, is at 68,150, so extremely close to an all-time high. Do I think this is a likely scenario with 40-year high inflation, with the economic downturn, with commodities soaring? No, I don't think it's a likely scenario. I do think it's a likely scenario we turn around at 44K, and it's also a likely scenario we come up to 47, and potentially this is definitely in the realm 55K because it is the golden ratio, the 1618 on a wave projection. That is potentially in play as well. So those are all my likely scenarios. And let's go ahead and look at this on, that's the 4-hour. Let's look at our Ichi. Let's see what kind of progress we're making here as well. And Ichi. We are still looping around here, and I believe this is going to form. And yep. So we're still looping around, and we still have our EMAs cutting through, and then we have the ceiling and the 618 all right here. Lots of confluence for resistance here, okay? And again, how you handle that resistance, do we just make a bottom? Like we did right here, do we just make a bottom and then come back around and maybe punch through and retest it and then come up and try these other levels? You know, you could. That 55 level, I mean, I think a lot of people will be really happy. Getting back up to 55K will give us a nice long opportunity on a trend breakout, trend trade that guy, and it'll give us a great short opportunity if we get resistance at the fib. And that's just all part of trading, guys. But everything, you know, the candle action itself since the last time I made a video, which is right here. I mean, this isn't a lot to report. We're being rejected by the moving averages. We're still looping around like we've been talking about for, I guess, almost, what, a week or two now? So we've been talking about this, and I still do expect that test up. That Fed meeting, when Powell speaks tomorrow, listen to his comments or listen to some highlights, because if he's dovish, I expect the markets to rally. If he's hawkish, I expect the markets to potentially dump, and maybe that's where you get that soft rally up to 44K, and then you lose some key support levels, okay? Anything is possible, guys. Stay tuned for the next episode. Check out BitGet, our sponsor. Link in the video description. Totally anonymous, which is very important in this day and age, if you know what I mean. You can register with just an email. Top 5 exchange by volume. My favorite exchange, I've used 5 different exchanges. That's why I rep them, and that's why they're in the video description. Guys, Discord, like I said, 6,000 people there. Come check out our education suite. I'd love to see you guys in the room. We actually interact in a room. Me and my admin team, they're professional traders, and we will be there to help you and guide you along the way. All right, guys, another video coming tomorrow. Be safe. Have fun. It's pouring down rain here. I'll talk to you guys tomorrow.